Everyone's saying that the Sandpoint housing market is on the brink of a crisis. Sky-high prices, mortgage rates that are high, buyers being priced out, and a flood of inventory that's about to crash the market. But what if I told you that they're wrong? Stick around because I'm gonna go over some data and some graphs that might completely change how you see this market. I'm Ben Geanetta, a real estate agent here in Sandpoint, and I'm helping people just like you navigate the ins and the outs of buying, selling, and relocating in North Idaho. And today we're diving deep into Sandpoint's housing market. We're going to explore what's been happening, analyze detailed graphs, and we're going to break down national trends that are shaping the local market. And if you want access to my free housing data spreadsheet that's packed with all the latest numbers and insights, go down in the description below and check out the link. So why are people fearing the housing market? What's the big buzz about? Why is everyone so uptight and worried about it? Well, it goes back to a common denominator that we've seen for 24, 30 months, and that's high interest rates. Because high interest rates is really making these higher home prices and affordability a challenge. And because you have this big challenge and this big talk about affordability, there's this constant buzz about a possible market crash. And I get it. With high interest rates, high home prices, milk and eggs and gas and clothes and everything else being super inflated, being higher in price and making affordability more of a challenge, I get it. Like, you're out there, you're living, you're buying, you're trying to survive with all these high prices just like me, and it's hard. You're feeling that squeeze of every single dollar, every single penny. So it comes at no surprise that they're concerned about affordability when they're looking to buy a house. It's a real thing, it really is. As human, we're gonna start thinking something bad has to happen for this to get better. And so a lot of people are predicting that the housing market is just going to implode. It's going to fall apart, similar to what we saw in 2008, because there's going to be a flood of inventory hitting the market. If you can't afford your groceries, then how are you going to afford your mortgage payment? Well, if you can't, so you're going to sell it, and there's going to be thousands that are going to sell their house all at once, flood the market, and that's going to drop the price of homes down, which in turn will help bring down mortgage rates. Well, that sounds convincing and I guess logical. That's all surface level data, and it's not even really data. You really have to look deep into the numbers and look at the right numbers to get a complete picture, and that's what we're going to dive into. I'm gonna show you why home prices coming down is highly unlikely, especially here in Sandpoint. So right now we are looking at national data, and we are going to zoom in, we're gonna bring it home, no pun intended, and we're going to look at Sandpoint. So right now, until I say otherwise, we're talking about national data. And the first thing that I wanna talk about, nearly 40% of homeowners, they are mortgage free. That's right, almost half of everyone who owns a home does not have a mortgage. At the end of 2023, 60% of those homes that did have mortgages had rates that were under 4%. And we're calling this the golden handcuffs, because if you have a mortgage rate that's under 4% or lower, it's really hard to get rid of that mortgage by selling a house and then getting something that's at 6 or 7%. So what are those people doing? They're just holding on to their homes. They're able to rent them out to cover their mortgage payment plus cash flow. You're not seeing those 60% of those people putting their house on the market. They might find a way to hold on to that house and keep it as an investment. The third thing that I want to bring up, just 1.7% of homes are currently underwater, and that is a historic low. It's just crazy to think that of all the houses out there, less than 2% are upside down. Then we look at the average loan to value data, and currently we're under 50%, meaning that most homeowners have a ton of equity in their house. People are just sitting on a massive amount of equity. So if they are starting to feel squeezed and pinched and things are getting a little tight, they can just go to their house and pull out money to kind of cover the gap for the time being. That was something that was not available in 2008. All right, let's move on to home builders. And since 2008, builders, they've been underbuilding. They haven't been able to play catch up. Builders have been underbuilding for 15 years, and there's still a lot of demand. And building new construction helps with growth, with inventory, and it just hasn't been there. In fact, the National Association of Realtors, they're predicting that this growth to continue year over year, and that's really good to hear. More inventory is going to help bring down those prices, or at least maintain them, slow down that growth. And when you wrap up all of that data, all that national data about homes not even having a mortgage, and the ones that do having, and that's a great rate, and then you look at the loan to value, where almost everyone has equity, and there's less than 2% of people that are upside down. When you put that all together, you put a bow on it, this housing market is just built completely different. We're not seeing bad loans being handed out like candy. We're seeing good fundamentals remain when it comes to buying and lending. And that's a big reason why home prices are going to continue to go up nationally for a national average, and even locally here in Sandpoint. And you can look at this data right here, this sheet. This is what, 10 different companies who are putting their predictions on appreciation levels for for the United States, and they look pretty reasonable. They're not being completely unrealistic. They're not trying to be ambitious with like an 8, 10, 15, 20% year over year increase. We're on average like 3%. And in 2024 from 2023, that's what Bonner County saw for an appreciation. We saw about just over 3% of an increase on home prices. And if you ask me, that's a pretty steady and responsible growth rate for a home. And let's look at our local market here. And I want to start by showing a graph of the average sale price for a single family home, because that is the most common house that's being sold. And like always, you guys know, I'm using a rolling 12-month graph because it tends to tell a better story of actually what's going on rather than looking at a month-over-month graph. So here's a graph. It's showing a trend I think is worth taking a closer look at. If you look back in 2012 here in Bonner County, the market was moving pretty horizontally. Then it started to climb steadily. Now, if you look over further in 2023, and into 2024, you see something that is very similar. Nice horizontal movements. You have a little bit of a pushback, same thing in 2012. And then in 2012, it started taking off and it didn't look back. So we're going to see something similar where we have a very similar graph in 2023, 24, horizontal, little pullback. Are we primed for a takeoff? Time will tell. Now, what about closed sales? Well, here is a graph showing monthly closed homes. And as you can see, for a decade, more and more homes were being sold. It was outselling the previous year. And then we followed up with 3 consecutive years of a decline. From 23 to 24, the numbers of closed homes stayed pretty identical. So now if we change this to a rolling 12-month, the last time Idaho saw 4,600 homes sold was all the way back in 2015. And you'll notice that big peak in the summer of 2021, right in the middle of COVID. When you're looking at closed homes and the average sale price, what does this mean for buyers? Well, here's the deal. Waiting just might cost you more money than you think. If you're waiting for the right recipe, rates, and price to come down, it might end up costing you a lot more. I've been saying it since the beginning of this video. Rates right now, they're king, they're key. It's what's driving this market because it's what affects affordability of a house more so than the price of the house. So as mortgage rates come down, and they will, I don't know exactly when, but they will come down. As they come down, more and more buyers are going to come into the market. And that's what's going to flood the market. It's going to be buyers, not homes. And as you get more buyers, there's more competition, and you might get somebody that's in a better position to you, and they're going to offer more money or different terms, and you're going to lose out. So you might end up losing a house that you love because it's now more expensive. And just take a look at this graph right here. Rates today, they're right around 7%, and they're expected to trend down lower. So even a slight little drop in mortgage rates, it's going to bring more buyers to the market, which is going to reduce your negotiating power and going to raise your competition. And I want to share this graph with you. This is showing mortgage rates from decades back, and you can see how they go up and down, up and down, up and down, all over the place. So they're going to come back down, and we're still pretty good. Like historically, even though it sucks because the prices are high, historically we're kind of about average, maybe slightly above average where they should be. And this is my advice to you as a buyer right now in this market. If you are able, if you're ready to buy a house, be on the lookout. Do everything that you need to do to get ready and just look for that house. If you see that house, jump on it. Yes, your payments might suck for the first 30, 60, maybe 12 months, but you got it at a good price. You got some better terms out of it rather than waiting for everyone else to jump into the market. Because right now, we're still in a balanced market, which means you currently have some leverage with the sellers. Whether that's asking for a price reduction, repairs, or other concessions, you have that ability right now. But as it turns closer to a seller's market, you start losing that leverage. So let's take a look at a couple graphs right here. The first one is going to be a rolling 12-month average of month supply of home, meaning if we have 3 months of supply of home, when you do the calculation, in 3 months we'll run out of houses if no other homes come to the market. So real quick, anything between 0 and 3 months is going to indicate a seller's market, 3 to 6 months is a neutral market, and 6+ months is going to be a buyer's market. So in this graph, the last time North Idaho was in a buyer's market was August of 2016. That was a long time ago. The second graph, I'm showing you a month-over-month supply, and in 2024, the peak of month supply was 5.7. So we're still within that neutral, getting close to a buyer's market, but we're still in a neutral market. But let's take a closer look, and you're going to see this easy trend, which started in 2011, and it bottomed out in 2022, and that's inventory. You just saw the month supply of inventory go down and down and down that entire time. And now we're on the opposite side of it, and we're starting to see an upward trend. We've seen it for the last couple of years, and it's not an aggressive influx of inventory, it's steadily going up, kind of like how it steadily went down. So you can see with the data that prices in Sandpoint, they're pretty resilient, even during the down and the slow market. So if you think prices are expensive today, they're likely going to be more expensive tomorrow. And that's why, again, if you're able to buy now and you find a house that you love, buy now, because it's probably just going to be more expensive in the future. Okay, for sellers, what does this mean? Well, home prices, they've remained pretty stable in the last 24, 30 months. Prices have moved fairly horizontal. Yes, you have some seasonal downturns and upticks, but overall, everything has stayed relatively normal for the seasons, and the prices have remained fairly flat. When you go to sell, pricing right is huge, especially right now. Talk to your real estate agent, watch the market, and if you start to see it's coming back to a seller's market, you might be able to get away with being more ambitious with your price, but right now we're not there. So what I want you to do is price appropriately, because if you truly need to sell and you're being ambitious, you want every penny on that table. Well, buyers today, they're really savvy. They know when a home is overpriced and they're not going to waste their time. They're not even going to come and look at the house. So setting a competitive price from the beginning is crucial to attract serious offers and more buyers. You need more buyers to get the best deal, the best terms as possible. There's one thing that's clear here, that this market is just built differently than the one that was leading into 2008. It's driven by real demand, cautious lending, and a limited supply of homes. And you've seen that. You've seen the data that there's a limited supply for homes, and there's not this wave of homes coming. So the key takeaway, timing matters, but preparation matters even more. As rates continue to shift downwards, having the right strategy in place can make all the difference. Let me know what your thoughts are on the housing market up here in North Idaho. Do you agree with me that the housing market's going to be okay? Or do you think I belong in a mental hospital? Let me know down in the comments below.